Hey everyone, welcome to a new episode of Trader's Den. We're all chasing it, that elusive edge, the repeatable advantage in markets. But what if the edge itself is just an illusion? To test this, we'll build the simplest strategy possible, pure randomness. No analysis, no indicators, no logic, just chance. Think of flipping a coin, heads, go long, tails, go short. In practice, we'll let a random number generator make the calls. The question is, can luck alone be profitable? Step 1, the system picks a random number. Step 2, if that number's even, we go long. Step 3, if it's odd, we go short. That is the whole entry signal. We're backtesting this on the NQE mini futures using 1-minute data all the way from 2008 to 2025. And these are strictly day trades. We get in right at the market open and we're out by the close. We have assumed the costs of trading based on retail trades. However, because the date range is large, assumptions for the past costs may be slightly inaccurate. Now, this last part is super important. We're setting a random seed. All that means is that the sequence of random numbers will be the exact same every time we run the test. It makes the results repeatable over multiple runs. But, hold on, we will see the variations to this further. When I refer to TP equals 50 points, that is valid when NQ is at 20,000. That is 0.25 percentage points, and those are rounded up in the backtest. So if NQ is at 21,000, TP equals 52.5, which is rounded up to 53 points. But to avoid confusion, whenever I refer to take profit or stop loss equals 50, assume that it is based on a percentage points. And therefore the actual stop or take profit points will differ based on the entry price. Another variation could be to use average true ranges. But hey, I wanted to avoid indicators completely. We will test using different risk parameters. I know you are eager to see the test results now. Let's go ahead and get into it. The first case uses stops at 50 points and take profit at 50 points. This is a slightly negative reward to risk ratio. It is negative because of the slippage and commissions. The win rate is around 51%. But the results are not so exciting. It took off somewhere after 2020. The next one is stop at 50 points and take profit at 150 points. Win rate is around 31%. The results are slightly better. It often remained positive. There was a drawdown between 2019 and 2020, and then it took off. However, it has not been good. It has stayed flat for many years. Despite the lower win rate, the benefit of a high 3-to-1 reward-risk ratio is evident. However, the lower win rate might be unsettling. So, let us see if we can lower the profit targets and achieve a better win rate. This one has stop at 50 points and take profit at 110 points. Win rate is between 35 and 36%, similar to the previous one, but with lower profit and a slightly better win rate. But what happens if we let the winners run? To remind you, the positions are intraday only. This one has stop at 50 points and take profit is not set. We let the winners run. The win rate is pretty low at 27%, yet the reward risk magic works here. And we have an upward sloping profit curve. Let's try deepening the stop. Not that I recommend it. This one has stop at 100 points and take profit is not set. We let the winners run. The win rate is now close to 39%. This one is interesting. After 2012, we have an upward slope on the profit curve. The value of NQ is smaller in the earlier years, and therefore, the profit curve appears relatively flat in the chart. For a moment, it must have felt like there was an edge, but it's not. Let us look into it further. We used the magic number 42 as a random seed. Why did I use 42 as a seed source? Well, it is common in machine learning, and I just carried over the seed here. There is a fascinating story behind it. I will link in the description below. But what happens if the random seed is changed to something else, let's say 41? Let us take the best case scenario that we have had until now. The stop is at 100 points and the take profit is not set. The results with random seed 41 are significantly worse. Let's see another experiment with the random seed 42. I will use the same random numbers that we had earlier with seed 42. But I will skip the first few numbers. I will go through different skip counts. Pause the video if you have to. The results vary. They are not as bad as changing the seed, but not something you would like to see on a profit curve. If we trust that a particular random seed works when started at a specific date, that feels superstitious. Yet sometimes, it does keep working, at least for a while. And that raises the real million-dollar question: how many of the strategies we trust are just well-dressed illusions of chance? But we're not done with randomness just yet. In the next video, we'll see what happens when a whole army of random number generators takes on the market. If you found this video helpful, give it a like and smash that subscribe button. It's the simplest way to earn some instant karma. Those buttons don't get nearly enough love, and your support really helps us grow. And hey, we'd love to hear from you. Drop your thoughts, questions, or feedback in the comments below. Thanks for watching, and trade smart.